Hi, welcome to this brand new series called The Next Big Fin. This is a very interesting series where we are talking to FinTech disruptors. Today is episode number 1, and we are doing an episode in the crypto space for the first time. We have not really done anything like this before. And I'm very glad to welcome 2 people. One, Geoff, who is basically the founder of TradeTogether. Yeah, a little bit more about him. And then we're also bringing in Jeet, who is our co-host for the episode. He's done amazing work. I'm sure you've seen the intro episode with him. Very great guy. Very excited about this. Now, having said that, let me bring in Geoff into the show. Geoff, welcome, mate. So happy we are finally doing this. I know it has taken us like 18 months to plan this, but really happy we are doing it. So your intro, what are you doing? Why are you doing? Go.
Thank you so much, Laksh. First of all, I'm super humble and blessed to be one of the first invitees in the Web3 space, in the crypto. So I take this really as a compliment. Thank you so much. So indeed, I'm Geoff. I'm the founder of TradeTogether, a Web3 digital asset management firm that was created in September 2021. And what we do is pretty simple. We are managing assets on behalf of our client based on their risk tolerance, risk appetite.
Great start.
Yes.
You are in such an amazing position in SC Ventures. I believe you are the CRO at
the Chief Risk Officer for one of the venture Autumn.
One of the venture Autumn. Great. And Mike was, by the way, our first guest ever. Mike Kruger was the first guest. I think he was one of the first 2 people to say yes. That is what got it Digijanus. Like we got Digijanus started.
Wonderful.
He also recommended our second guest. So we have some history there. Great. Mate, you're doing so well. And Web3, at that time, it was called crypto, blockchain, all this space.
Right.
Has a bad rep.
Yeah.
In the traditional space. Why would you make this transition?
Yes, that's a wonderful question. I think it goes back to when I started my career back in 2008, which is a wonderful year to kickstart your career in the financial industry.
A great start.
The GFC, a great start. So I guess there is some comparison between 2008, where I started my career because of all this crash and incident with the financial market, and what happened in 2021, in a sense that the reputation of this industry, the crypto industry, was indeed controversial. But at the same time, I could tell that there was something to bring in terms of added value in this space that I could work on as a co-founder of TradeTogether. And that's really what pushed me to kickstart this business.
Great. Let's dive a little deeper into that. What do you think was one thing, or what is the one thing that crypto industry gets wrong about the financial industry or managing money?
That's a fantastic question. I will say what crypto industry gets wrong about the behavior or to develop and how to grow in this world is somehow what every human being make mistakes on, where they don't know or where they have not gone through this type of path before. So that's why I'm telling you, it's not exactly applicable only to crypto. I guess it's also applicable to lots of industry domain. You have to try at some point, right? Now, it is true that when you are managing clients' asset, people asset, there is some protocols, there is some control, some element of regulation that you can't ignore. And that's potentially some of the issues or potential issues that we have faced in 2021 and also before. Now it starts to get better.
Yep.
I think there is a better understanding between the crypto industry and the regulator and the financial industry, the traditional financial industry. But there is still some work to do for sure.
And that is a very mature answer. One, you're saying, yep, this is part of growing up. And then as an industry, we are growing up. There is better understanding on both sides, the crypto as well as the regulatory side of things. So great answer, mate. Now, let's dive a little deeper into this. What exact problem are you trying to solve in the industry?
Yeah, wonderful. So the exact problem that we are trying to solve in the industry, I will say, is to, first of all, bring down the barrier entry to some investment products that are still not accessible to, I would say, the vast majority of people. Okay, that's number one. Number two, I like to make this comparison between the DeFi space, we're going to discuss it potentially, and the Napster period 20 years ago.
Yeah.
For those who remember that, where we started to see the arrival of decentralized peer-to-peer servers,
Yes.
where youngsters could download MP3s. Maybe you're one of them. I was one of them.
Oh.
And it started to shake a little bit the music industry. It was totally unregulated, but at the same time, it has enabled a large amount of people across the world to get access to the music in a way that never existed before.
Yeah.
So in the DeFi space, there is a real comparison between these, because if you look at the statistic today, all the Gen Z generation has access today to some investment product, to some digital assets that we used to call stock 20 years ago, much earlier compared to the older generation like you and I.
Right.
So that's what we need to understand about.
I love that answer, because I love the example you used there. Napster started as Wild West, obviously got shut down because of the illegalities of the business model or the operating model. However, it was a precursor to all of this Spotify, Apple Music, etc., which are regulated services, which are taking care of interest of the music creators, IP, everything is getting taken care of. So it was a precursor. So am I hearing this right, that all of this chaotic movement in crypto or in Web3 space is precursor to something which is more regulated, more clean, more transparent?
That's absolutely spot on.
Okay.
That's exactly what I wanted to say, and you just summarized it brilliantly. I think we have to acknowledge that this technology is somehow comparable to the decentralized Napster type of peer-to-peer example I gave, and also to Swift somehow, but let's maybe not complexify, let's just stop to this. I think there is an element of experience that we've faced for a couple of years, and this maturity is about to come. And the way to access to this maturity is the regulatory aspect, which is looking at the control, looking at the framework, looking at the infrastructure, and to make sure that the rail that we have developed, which was not really admissible or not really, let's be honest, this was not born in the traditional financial space.
Right. No, great answer. And obviously, we've had so many chats. The first time we met, you were just going through your MAS Sandbox application.
We have the exemption since October 2021,
yes.
And we're about to get the full license.
And we are going to celebrate that, sir, because you've been doing great work behind the scenes.
Thank you.
Now, let's say if I were to go back and explain to my daughter, is 2.5, so it will be hard to explain, but a 10-year-old, what TradeTogether does, how should I explain that?
To a 10 years old, I will say what my son is saying to his friends. We are protecting people when they invest their money. We are protecting them when they invest money in new product. That's exactly what my son said to a friend of him this afternoon in front of me.
And that is a great way. How do you do that? You are by being in the regulatory framework, or there are other steps involved as well?
Yeah, of course. So how we do that, I guess there is a large element of risk assessment that I bring with my luggage and that I brought to this space when I started TradeTogether. And I would say there is a sort of marriage between the controls that you can see in an international bank, but also into a cloud provider, such as I won't give the name, but you may have a mix of controls coming from cloud type of services, mixed with some international bank core enterprise risk management framework. Right. We mix all these type of control into one library, and we're going to go to each of the product, each of the token, each of the protocol prior to test them. Then we're going to test them ourselves, and then we're going to establish a note. We're going to put a note from low to high risk. And then once we are all done with that, we approve it or we reject it, then we can propose to our client.
Okay. Now let's walk through this journey.
Yeah.
I can be an individual investor, or I work for a financial institution, right? And I will let Jeet take care of the financial institution part, because he's obviously much better at it. He'll drill you very well. As an individual investor, when I come to you, what am I coming for?
So as an individual investor, when you come to us, in general, you have already experienced investing in securities, stocks, potentially bonds. Maybe you have also invested in the real estate.
Yeah.
But when it comes to invest in the cryptocurrency space, either you've done it, but you didn't find yourself comfortable at managing a cold wallet, at looking at a new interface of crypto exchanges.
Yep.
And you still prefer having the investment experience such as what you used to do with ETF or this type of traditional product.
Right.
So what you look when you comes to a TradeTogether is to have the same experience, a bit that you have, but for digital asset. And this is what we bring to the table.
Okay, you're describing exactly me. I am a more funds ETF person with a very curious interest in the crypto space, Web3 space. So you package these products exactly to look like an ETF or a fund or a digital asset. And digital asset is a loose term. What is the underlying asset that we are talking about here?
Yeah, wonderful question also. I will say digital asset, and there is an element of tokenization that everyone hears. It's a scary word. But digital asset, if we kickstart at the inception of it, we can think of Bitcoin, of course.
Yeah.
Which is, I will say, the definition or the image that everyone has about a digital asset. So that's a product which presents the characteristic of being an exchange or being like a medium of exchange into an infrastructure that we call blockchain.
Yep.
So that's what we call digital asset. But to make it really simple, I'm not sure if you know this movie, Avatar.
I know that.
You know that. So Avatar, if you remember in that movie, you have these characters, this blue tall type of characters, which somehow goes into a world. But as a human, some of the humans, they stay into their place and there is their representation into. So behind the digital asset, there is this element of a product which has a value, normally has a value if we go to some characteristic, and other, it's just another form of value, but with no collateral. But at the end, what is the similarities between both is trust. Do you trust or you don't trust?
Yeah. No, great example. And I never looked at Avatar in that way. We'll have to rewatch it. But before we go ahead, I must call this out. Tokenization, all of these terms can be very confusing. We did a series in collaboration with SFA where all of these industry leaders have come in and they've explained a lot of this. Go and press #capital currents and watch all those clips. A lot of effort has gone into that, guys. So would really appreciate your support there. And I'm sure SFA also does. Coming back to you. It seems like you're building a bridge between the Web3 digital asset space and the traditional asset space, because you are following what you call as a compliant method to go being exempt by MAS. You're talking about assets being tokenized, some of them with real value, some of them with notional value. I'll say notional to stay clear of controversy. And then you're talking about protecting the retail investor when they're investing in this. So it feels like you're building a bridge. And obviously you also said if you are more comfortable with funds, ETFs, etc., we are the platform for you. So you're building a bridge. So you see both sides, right? Now, we already asked you a few things about the crypto side. Let me ask you something about the banking side.
Please.
What do you think the banks are getting wrong about digital assets? Not crypto, but digital assets.
Oh, that's a fantastic question.
Thank you, sir. I appreciate the compliment.
I guess what banks get wrong about digital asset is that the banks should not look at digital asset based on their existing lens of controls or existing metrics of assessing a product that they already have in their book of trades or their books in general. Because otherwise, these banks will certainly go to the trap of looking at a product with some specific controls that are absolutely not applicable or not really fit for the real judgment that you should have about that new product, right? So, and we have to understand the challenge of banks, because banks are regarded by multiple regulators. Regulators themselves are asking to banks to be extremely cautious when it comes to bring such type of new animals into their book. And so there is this form of balance that banks should have constantly. And this is where the bridge that you mentioned, I'm happy to take also these words, comes in between banks and digital asset manager or fintech in general. Because if banks wants to restart this from scratch, from A to Z, thinking that they have all the attributes and all the knowledge to do it by themselves, this will never fly.
Great answer. One advice for banks out there.
One advice for banks out there, I will really respond very humbly on this question. Thanks for that, because again, I totally understand the constraint that executives have as running a bank. And of course, the fundamental question that we should all have is, how do we protect our customers prior to launch any product? Talk to fintech, talk to digital asset managers that have already gone through this for years now. And don't assume that someone in your department has the capacity to really understand that. It's really only about collaboration. And if we go back again to this example of Napster and Spotify, the music industry has nothing but to sit down at some point and to acknowledge that they had to discuss with these guys.
Yep. Great. Mind blown. Man, that was a fantastic answer.
Thank you.
Talk about collaboration, talk to these players, etc. Let me throw a curveball at you. A lot of times when you talk about digital assets, the common criticism is that it is not accomplishing anything that you can accomplish with traditional assets.
Yeah.
Talk to us about that.
I will say the important element to keep in mind is that when you manage as a bank a bonds program, an issuance of a bonds or an issuance of a specific treasury bill or managing some assets as a bank, you have to look at the credit, you have to look at sometimes documentary trade for other type of business, you have to look at various type of elements that are inherent to your business. It's really linked to it.
Yeah.
When you suddenly try to think doing this with a different infrastructure, what you used to manage for a bonds issuance program, having, let's say, 10 credit risk analysts, plus someone in charge of discussing with all the borrower, all the lenders, plus some specific document that you have to send to everyone and so on. Suddenly, and I'm even not mentioning the credit risk assessment and so on, suddenly becomes put into what we call a smart contract, where finally the risk assessment can be made even by an external team with the same quality of Moody's. You don't need any to have this person who's going to send all the documentation to make sure that all the person who is going to sign and so on. It is done through a smart contract.
Yep.
You remove some of the intermediaries, and finally, a bonds issuance program for which a bank won't make money anymore because it's just too small, 10 million, 15 million, then become profitable.
Yep. So, great answer. But Web3 crypto is an industry full of paradoxes.
Yeah.
I want to put you in the hotspot now. These are all easy questions. Now let's put you in the hotspot.
Let's go.
The first question. Let's look at the first paradox. You give me your thoughts on that.
Yeah.
The first paradox, I would like to call it disruptors or rebellions versus dependence. And what I mean by that is the industry started because it wanted to disintermediate, disrupt all the legacy infrastructure, get into a permissionless infrastructure, right? And now we are at a stage where you constantly see chatter on social media that BlackRock is coming in, this firm is coming in, etc. And this will now drive crypto or Bitcoin to $100,000, $200,000, etc. and stuff because they need to buy, right?
Yeah.
Has crypto lost its way, like the whole community? Because you started with this saying we will disintermediate the same firms that you are now dependent on. Talk us through that.
It's interesting because there is indeed a constant debate in the crypto industry and in the crypto community between those that are really, I would say, almost fundamental with a little bit of libertarian type of mindset that really don't want to have any compromise when it comes to collaborate with the financial industry, taking as a DNA the fact that Bitcoin, one of the first digital assets, was developed through the white paper. Everyone can come back to this as a form of somehow not repeat the mistakes of the financial industry as we live today. Okay, so you still have some of these category in the crypto industry that don't want to take any compromise. And by the way, when BlackRock started to warm up their arrival in this industry, they didn't take it as really properly. And you have still some large influencer in the crypto industry who still consider that BlackRock arrival as a massive holder of Bitcoin is not necessarily a positive move. So you have this part of the community, and that's a reality. And then you have another side. I think it's really diverse, and we should not just consider that it's only one voices. You have so many voices. My view, since I started my journey in the cryptocurrency, in the crypto world officially in September 2021, is that it has not changed. These worlds of TradFi and crypto will coexist, because there is no way we're going to make disappear Web3, and there's no way we're going to make disappear Swift. If everyone knows Swift, this infrastructure that everyone is using and no one talk about. And that's the beauty of it. The beauty of Swift is that no one knows that they're using it. And the beauty of Web3, I would say the beauty of blockchain will happen where no one will realize that they're using blockchain. We have not reached that stage. So to me, the question is not about have we lost our mind? Have we lost of this mission? No, is it customer friendly or not at the end of the day? That's really all about that.
Yeah. And you have dived right into my next question.
Okay.
The industry was built around anonymity.
Yeah.
Now to do what you are saying to do, you have to bring in transparency, regulation, being accountable.
Yeah.
How is that going to play out for all these hardliners who believe crypto should be decentralized, traditional finance should be separate, etc.? How will this play out with them?
So I think there is an element of accepting that we live in a world where you have various views about we should keep some aspect of our life totally anonymous and private life, even data privacy somehow. But and also to understand that if we go back to 2008 and the global financial crisis, what the society was saying was not necessarily that they wanted to have anonymous digital asset. What the society was saying, at least from what I remember, was that they wanted this financial crisis of big financial institution having a large amount of asset, but finally they don't really understand what they're doing anymore, creating a massive blowout, impacting not only bankers anymore, or mostly impacting just the society only. So I suspect we need to understand that if we want to have a form of reliability, not only with regulator, but also with all our clients and customers, we can't just stay hidden and preach for people to just accept who we are or what we propose. We need to be accountable.
Great answer. Let's dive a little deeper into this. This conversation is going in a very good direction. As TradeTogether, you do digital assets, which is crypto. You do tokenized assets, which could tokenize any asset out there, let's say. But in a large sense, your ability to succeed will depend on how friendly is the crypto industry with the traditional FI to regulation, etc. and stuff. We are in agreement there, right?
Yeah.
Okay, great. Let's say tomorrow you become the CEO of the biggest exchange out there. We cannot take the name, we'll get a copyright notice. Okay. Cannot take the name. You're the CEO of the biggest crypto exchange out there. What are 2 or 3 things you can do to build trust with the regulators, with the ecosystem, with the financial industry per se?
So if I'm the CEO of the biggest crypto exchange, this signifies that TradeTogether will have gone through not only being a digital asset manager, but also a crypto exchange.
Yeah, absolutely. So TradeTogether becomes the biggest. I will take my question back, and we are not going to delete this.
No.
I'm sorry. Okay, I will take this back, guys.
No, that's a
this is late
one.
in night, but let me rephrase my question. It is important. TradeTogether becomes. But this question will not be really valid because you are already taking a regulated path. You're already doing that. So we are going to go back and we are going to take you and put you as the CEO of the biggest crypto exchange today. Yeah. In future, it is going to be TradeTogether.
And the biggest crypto asset manager.
Crypto asset managers are already in compliance, right? Yeah. There is a reason I'm picking up crypto exchange.
Okay.
Who mint out unlimited number of tokens which are supposed to be backed by US dollars. You're the CEO.
Yeah.
Let's come back.
Yeah.
What are you going to do to build trust all around the ecosystem?
That's a wonderful question. And what is interesting also is to recognize the work that has been done in the past and right now by the crypto exchange that are today to the top. And we don't have to name it, we all know them. I think there is one specific element that was, I think, obtained, which is, again, I don't reinvent the wheel, trust. If you have today the top 3 asset managers that have a volume of exchange, sometimes which is beyond the traditional stock exchange, it signifies that trust has been gained amongst millions of customers, millions of clients that, like we said in the beginning of this podcast, invested early compared to the older generation like us. So I think where the work has to be done now is, I would say, of course, there is still the user experience, there is still an element of security, which is critical. But I will say the next step is really discussing in a better way with government, with a regulator, with all the actors of the society, and somehow getting out of our ghetto. Because we are still in a ghetto today. And I think that's important to move to the next step of maturity, to be ready to talk to the society and not being outcast. I think that's what I will do as a CEO of the biggest crypto exchange. And some people are working on that. Some CEOs are doing that. Yeah. But there is still work to do.
Absolutely. And coming out, having a fair and candid chat, transparent chat with regulators, agencies, and it will bring in a lot of transparency. Yeah. If you want the institutional money, it cannot come without the institutional compliance and regulatory frameworks. Great answer. You have two questions. Please. And then we will hand you over to our good friend Jeet.
Yeah.
First, one regulation could the regulators introduce today that would make your life simpler?
That's another good question.
Thank you, sir.
I will say the one things that will simplify our life as a crypto player and Web3 players is one factor. It's not AI, it's not Gen AI, it's not cloud, it's human.
Yeah.
We need more human looking at us, at not everywhere. In all the world where you have some hubs of crypto, you need to have more human trained and ready to support the teams that are already trying to do their best to assess the riskiness of the crypto industry. We need more human.
Did not expect that answer. Great. And you know that you come in and people are talking about regulation changing, etc. And that, yeah, you're right. We need more humans. We need more engagement. We need more dialogue between the two sides. Last question. What's next for TradeTogether?
What's next?
Let's say you get a license.
Yeah.
What are we looking at?
I think what's next for TradeTogether is really to keep working on our mission, which is really to simplify the user experience and client experience when it comes to invest in the Web3 space, to really put the blockchain infrastructure under the carpet so that you can really invest with ease. And we are really looking at transforming the wealth management that exists today to, I will say, a stage where we can really, I would say, maximize the benefit of alternative asset, tokenized product, our client and the next generation. That's really what I'm looking at.
Thank you. We're looking forward to that. It has been a privilege sitting down with you, having this conversation. One thing you asked for is we need more human dialogue. So we are going to bring in Jeet. See, we hear your feedback very quickly. So we are going to bring Jeet, who's co-hosting this episode. Guys, stay around, hear Jeet and Geoff discuss how they would engage if this discussion was happening within a bank and how they're going to take it forward. So completely unscripted. It goes next. Thank you so much, Geoff, for taking all these questions. And we'll see you after a small swoosh.
Hello, everyone, and welcome to the second part of the Digijanus episode with Geoff from TradeTogether. And my name is Jeet. I've been into banking industry for the last 22 years in Singapore, worked with various banks in the digital part of the world. And I'm very excited to have a conversation with the TradeTogether team. So Geoff, thank you very much for joining me. Had a great conversation with Digijanus host Laksh. And I heard about the introduction, what your company do, what TradeTogether is doing, how they are trying to simplify this whole digital asset unlock and for the end customer so that they can easily own the assets. But I was a little bit curious about that. What kind of products you deal with, what kind of products end customers can buy from your platform or website? Do you have a website or you have an app? What kind of things? So maybe give a little bit more about these things.
Yeah, absolutely, Jeet, and thanks for having me. To respond to your question about TradeTogether platform, we really started this journey business with one fundamental point that we wanted to sort out as a problem, which was the access to the crypto space and how to somehow give access to our client based on their risk tolerance and risk appetite. So most of our sociology of clients are investors that have already put some of their personal assets in stocks, in bonds, in real estate, a little bit of digital asset also, but their experience maybe has not reached what they wanted so far. And these clients are also often investors who are pretty familiar with some existing platform in the traditional finance space. So the idea was really to sort out this problem of complexity of having your wallet, of conserving the key phrase of your password, and managing some new form of interface that are related to digital assets. So how do we simplify that to deliver a better, simplified experience for our client and managing with it all the cybersecurity aspect that goes with it.
So just to elaborate on that, so there are many platforms which are already available through which customers can buy and sell different digital currencies.
Yeah.
We have the number of exchanges.
Absolutely.
And not only they can buy the digital currencies, but also they have little bit of funds and all those things which is focused on the cryptocurrency. So how different is that TradeTogether is from those platforms?
Yes, that's a fantastic question. When we started TradeTogether, the idea was really managing specific funds that will look like or will have the characteristic of a traditional fund, but in the blockchain space, in the digital asset space. And I give you one example. That's the first fund that we developed, which is called Stable Growth Staking, which aimed to have the same type of experience that you have when you invest into a money market fund, but with a difference that we will pivot that into the blockchain space with a specific protocol in the DeFi space, allowing you to generate a little bit more than a treasury bond.
Okay.
So this is where the comparison stops, because the asset behind are the result of some specific lending borrowing protocol, some specific revenues that you generate with the blockchain itself compared to treasury bonds that comes from a government. So that's also not the same risk necessarily. However, this type of funds, when you purchase it as a customer, is different from buying, selling a token. And this is where the difference resides from TradeTogether digital asset management model compared to a crypto exchange, which is really focusing on giving you a range of tokens, sometimes derivatives, a little bit funds right now, but the funds won't be created by the crypto exchange. It will be created by the digital asset manager, which is TradeTogether.
Okay, so I think I'm very fascinated by the answer what you've given me. And I think there are 2 or 3 components which I would like to understand more. So what you said that you are not only selling the digital currencies, maybe some part of the digital currency you might be selling just to keep the hygiene.
Yeah.
But primarily what you're saying is you have indirectly So the customers are putting money into you, and then you are curated some kind of funds by yourself.
Yes.
And the underlying assets are the digital assets.
Primarily, we are a fund manager, with the difference that as a native asset manager in the Web3 space, we are managing primarily, for now, that's our mandate, digital asset. We are working on a feature to provide leasing of in a non-custodial manner, but that's not our primary business. Our primary business is really fund management, developing a fund structure for our client based on their risk tolerance. It can come from the stable growth staking funds, which is now 3 years old. We generate around 10% per year, all the way to what we call digital bonds. You can look at it as a corporate bond, but which is tokenized, and we can come back to this definition of tokenization. All the way to tokenizing some treasury bill, some treasury bonds, and also receivable financing, what you can see in the trade finance world. All that is coming now to the tokenization world, and that's what we are working on.
I think you have mentioned many times. I think for just the benefit of the end customer and the audiences who are listening, maybe we can take one by one.
Yeah.
Okay. So my understanding was that you are a platform.
Yeah.
Okay. That you are a platform, and then where you are distributing the different kind of digital assets, whether it's the currencies or the funds and all those things. But now what you're saying is you are not only a platform, but also a fund manager who is curating the funds as well.
Initially, since day one, we are a fund manager. So we really started as a fund with the idea to help our customers to really simplify their journey when it comes to investing in cryptocurrency. So when you go to a crypto exchange, either you have a clear view of what you want to buy as a digital asset. Maybe you have gotten some advertising or some recommendation from a media or someone telling you to invest in one asset or another asset, and then it will fluctuate. It will fluctuate because the markets are volatile. Here, the primary of TradeTogether since the beginning is to create funds, to have funds, and to help our customers to basically invest with the idea of, okay, generating 6%, 7%, or 10% fixed.
So we'll come to that on this, how you make the money. But just to set the level base. So what you're saying is you are a fund house. But now you have a platform also, so that customers can come and buy and sell.
Absolutely.
So it means you are open to distribute your funds to other platforms as well in future.
We are, so in the future, we are open to distribute our fund. We are already doing this. What we can see right now in terms of trend is players willing to distribute or put their funds or product into our platform. Since we have now a platform live and we have our mass MIS exemption here in Singapore. So we have more and more external players willing to put their product so that they can potentially benefit of more AUM.
But just to see, you want to put your funds where the customers are. So that more and more customers have exposure to the funds. And right now you are new, and then getting the customers or the users on the platform is not an easy thing, right? Many exchanges or even the bigger marketplaces have struggled with that. So why do you choose to have the strategy that, okay, I want to have a platform where you will not only distribute your funds, but also distribute the others' funds versus that you should distribute your funds to the established the marketplaces?
Because when we started back in 2021, it was important for us to develop a track record. And it is really difficult, I think, or at least on our side, we didn't took that direction to basically kickstart from scratch with no track record. And you're going to start to promote your fund using some fantastic return, but without really proving that you are capable to do it. Since October 2021, as Jit, we've seen so many incidents in the cryptocurrency space, lots of up and down. And right now, the period is pretty good, but 2022, 2023 has been really difficult. And all this experience gained since 2021 has proven that and our platform and our strategy and our risk assessment and our methodology have enabled to create this expertise of a portfolio manager, of managing this technology in the right way. So I think developing at the same time a portfolio, a platform, and a mobile app was important for us to really develop our value proposition and propose it to the market.
Okay. Yeah, so I know that this is a very ambitious and difficult task. So all the best to you
Thank
for
you.
that. So let's little bit dig down into this whole fund thing. What kind of fund you have?
Yeah.
And what are the underlying things are there? Because my understanding of the funds is that, okay, funds can have, let's say equity based fund.
Yeah.
There are multiple equities are there. There is a active fund manager who's managing the fund and ensuring that the customer gets the maximum result, maximum the returns.
Yeah.
So tell us more about what kind of fund you have, what is the underlying asset, and how those assets are making the money for the customer.
Wonderful. Yeah. Thanks for this question. So the philosophy of TradeTogether is really to develop funds since its inception that have the same behavior of fixed income type of funds, but with more revenues at the end of the year. Otherwise, we are not competitive with classical funds that you can find in the traditional finance industry. What we have developed as a first benchmark fund was really to, first of all, assess the quality of the vehicle that goes with it. Number one, that's what we call stablecoin, which is the medium of exchange that we are using to invest. It brings a couple of added value. The first one is that, as the definition goes with, it's stable if the stablecoin has been well designed with the right reserve. Number two, the question is then to assess where we invest each of these stablecoins. And this is where we bring our expertise of looking at protocols and the actors working with this protocol into the blockchain industry to be able to classify them by riskiness and eligibility to invest in it or not. So that's really all the work that we do when it comes to kickstart a fund.
So your fund is not based on the digital currencies?
So our funds is based on digital currencies, which we call mainly stablecoin.
Okay.
Now,
but not on the others like the Bitcoin and then Ethereum and all those, which is then we can say that
we have other. So the first funds that we have, the stable growth staking that I'm describing, does not invest in Bitcoin itself. It will invest in protocol that may generate some alternative coin, but our mandate with these funds oblige us to put back everything in stablecoin.
So it means you are not competing with the Bitcoin ETFs and all those things, because
at least for this first fund, stable growth staking, we don't compete with Bitcoin.
Okay, so then you said that the customer invests in this, and then you put the money into this fund.
Yeah.
And this fund itself is putting the money into different protocols.
Absolutely.
So protocols, if my understanding is correct, you're talking about the concept of staking.
There is an element of staking.
Yeah.
Absolutely. Yeah.
Yeah. So staking in simple terms is somebody is lending that money, and that's how the lender is earning the money.
There is an element of lending, but there is an element of generating also the yield based on the activity of the blockchain itself. If you compare this with a highway, at some point you may potentially pay. So in Singapore, we are familiar with some of the tax when you pass and you have to pay a little bit. So the blockchain is the same. The more you have traffic, the more you can generate revenues from that. And if we are lending the funds, we can get revenues of it. So there is this element of lending, but it's not only you're lending to someone you don't know. You lend to someone that we can do the control.
Who controls that? You are controlling that?
We are controlling that because it's public. We have the chain, we have the report, we can see the activity.
This becomes a little bit of comparatively on a higher risk side, right? So how do you manage the risk for the customer? Because in the normal lending and all those things, there are proper protocols there, the underwritings are there and all those things. So how do you manage that risk for the customer? Because what you are giving is a high return.
Yeah, I will say high return, this fund is generating 8 to 10%. So we can debate on whether it's a high return or not. Some people will say it's not really high return.
From a traditional,
from
bonds
a traditional
perspective
lens,
or the treasury bond perspective.
It is high, I agree. So on the riskiness itself of the protocol, when I was mentioning about having revenues of the traffic of the blockchain, it's all about assessing the risk. So it's really a technology type of risk that you have to assess. But when you lend funds to a counterpart, then there is an element of credit risk that, like what you have in traditional finance, that brings some element of looking at the revenue of the entity, what are the balance sheet of this entity, are they investing in leverage or not? And then you have to perform this risk assessment like your companies to establish a score. And from there, you're going to balance how much you lend or not. And so far on these specific funds, we have not encountered any defaults so far, which I think is a proof that this...
So you do the proper underwriting for the customers who are lending and all those things?
We do the proper underwriting for these specific funds. On other funds that we have related to digital bonds, then we can bring other partners to understand the riskiness from a credit risk to complement and to finalize our assessment.
And how the customers liquidate the money once they want to exit?
So this is the beauty of TradeTogether. We receive the request from the client. And if it's for stable growth staking, there is no locking period. So the client is asking us to withdraw. We execute the order and we send back the funds in fiat or digital asset. In the context of digital bonds type of product, there is a maturity. So look at it really like a bond, where if the maturity was maybe 6 months, 9 months, then you receive your coupon every 3 months in digital asset. And at the end of the duration, you will receive back your principal. And then you can reinvest. And all that is done through a blockchain infrastructure.
Understand. So from an end customer perspective, let's say if I have the money and I want some kind of exposure towards digital assets, I have multiple options. I can directly put into digital currencies, or I can buy ETFs. And now there are some funds as well. Why a customer will go to TradeTogether?
Yeah, I think most of our customers who come to TradeTogether look at us as a way to be the go-to portal when it comes to invest in Web3. They don't have the time to do the research looking at what crypto will do 20x or what type of funds will give them benefit. If, let's say, they invest in a specific funds linked to maybe they will invest directly in Bitcoin. In that case, we give them the opportunities to invest in some type of funds that maybe were not available in the bank, simply speaking, or not with the same type of flexibility such as what we propose, or even not the same type of yield at the end of the year. So I guess that's where there is an element of collaboration that banks in general may have with a digital asset manager.
I understand. Okay. So now let's talk about the tokenization.
Yes.
That's another piece. So maybe for the benefit of the users, you can just simplify what is tokenization and how this plays an important role in the financial assets, in the traditional assets, and then maybe in the digital assets.
So I will say an easy example to understand what is tokenization, simply speaking, is maybe the very first tokenization that we may think of, which is a USD dollar fiat, or even a Singapore dollars, which I put on the table. And on the other hand, I'm going to have this avatar to take again this image illustration of this piece of SGD or USD, 100% comparable, but with the difference that it is put into a blockchain environment. Okay. What is the advantage for a company like TradeTogether or for a bank? Tokenization will allow you to make illiquid asset becoming liquid. We can take the example of a bond, which used to be this piece, and suddenly you tokenize it and you have the possibility to, even without fractionalizing it, but to divide it by a large number of pieces.
So basically you're saying that you can break the bigger chunk into smaller chunks.
Absolutely.
Tokenization, and then that people can trade.
Absolutely.
So what is the role of TradeTogether in this? Because this technology is available everywhere and anybody can do this kind of tokenization. So what's the role of TradeTogether in this?
So the role of TradeTogether is to bring the risk assessment of this tokenization and the regulatory piece, which is often missing into the tokenization world so far. It starts to come with the banking industry, but it's still at the nascent type of stage. So TradeTogether really brings this experience of looking at asset, tokenizing it, and bringing down the barrier cost compared to doing this into a traditional bank. So where tokenizing a real estate or a digital bonds will cost this much into a large bank, doing it with a FinTech and at a cost of a credit risk assessment, which is embedded into the asset. Doing this with 30 credit analysts or necessarily brings the cost down. That's the reality. And all that is shared. At the same time, you don't have to manage the paperwork that goes with it because it's directly embedded.
Okay, so now let's come to the role of the bank in your ecosystem, because the way I understand, you have a D2C, or I could say the B2C brand. Directly, you have a platform, you have your own products, you are a fund house, you are also building some kind of portfolio services.
Yep.
So you have one-stop shop for the customer for that. So what's the role of the bank here, and how do you see is this your partner? Is this your, I won't say partner, but is this your competitor? Is this or you are saying it's not a competitor because I'm building for something else? So what's your take on that?
So I think the way I look at it is I'm not in direct competition as a digital asset manager with banks. I think we are absolutely complementary. Number one, we have a possibility to form a strong collaboration to distribute product from digital asset manager to bank to customers. There is an element of simplifying also the technology existing in the bank to fast forward, to push forward the level of adoption of this product. And number three, there is an experience navigating this digital asset and infrastructure that banks are lacking. But nevertheless, the core fundamental activities of the bank is definitely not in competition with what we do. Banks are here to stay, and it's just an evolution of the financial industry. That's what we call the future of.
Very interesting. I think the task what you're doing is complex, and I think, as you mentioned in your introduction, that it is a niche area which will take some time to get the user adoption, the clarity, and all those things. And thank you very much for this discussion. I think very interesting, and all the best to TradeTogether and to you.
Thank you,
for
Jit.
the future success.
Thank you. That was my pleasure. Really. Thank you.